Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sully. It has been a very busy afternoon. We have made it though to the end of the day's trade, and what a good session it has been as well. You can see the CIBO 200 there up by 0.6%. Let's have a look at where the ASX 200 is. It's up 0.4%, 8,855, a new 20-day high in fact, and what a great time to really be heavily invested in resource stocks when you have a look at all this momentum that's coming through in commodities markets. We're going to talk gold specifically coming up in a moment, but just more broadly, of course, we did have a lot of mining momentum coming through today. So you've got gold, silver at these records. You've got this big push coming through in iron ore, in copper as well. All of this lifting our resources stocks. In fact, an index of mining stocks hitting a record high today, and an index of gold stocks hitting a record high on the ASX as well. Where we have seen weakness is in those tech players, similar to what you saw on Wall Street. Fortunately, we're not quite as heavily leveraged, but when you look at the market map today, IT was the worst performing sector. It was down 2.2%, but materials really lifting us higher, and we're watching very closely the market cap of BHP. Is it going to overtake CBA and reclaim its title as the most valuable stock on the ASX? It certainly seems to be heading that way. Also, still spending, we had the CommBank HSI Household Spending Index out today. A lot of money was spent on our bills, spending on utilities like electricity bills shooting up 15% year on year in December. Also a 9% annual spike in insurance spending, and also on our cars. We were eating and drinking, spending on food and beverages at the highest level since April. And in annual terms, the HSI sitting at 6.3%. So that suggests that real household spending tracking around 3% higher than the bank's own forecasts. And of course, we are on earnings watch. We've had a lot of the banks coming through out of the US, but we've also got Goldman Sachs, Morgan Stanley tonight, BlackRock, and of course TSMC in Taiwan is a big one this afternoon. I was talking earlier to Alex Pollack from Loftus Peak. That is one that he is watching, and he had a lot of really interesting insights into what he at Loftus Peak is investing in. Still in Nvidia. They first got into that in 2016. Still likes Nvidia, doesn't like Tesla, and likes a lot of companies in China as well. So be sure to catch up with that. It'll be on our website shortly. Let's have a look at some of the sectors, and I mentioned the mining sector, the actual index hitting a record. BHP up 2.5%, South 32 up 4.5%. When it comes to us opening our wallets again, let's have a look at how some of the consumer discretionary, oops, I missed gold. There we go. We're going to get into gold in a very big deep dive in a moment. Quite interesting though, despite that continued momentum in the spot commodity, that Northern Star was in fact the only one that moved higher today, maybe a bit of profit taking, and the consumer discretionary stocks as well, as I mentioned, on the back of some of that spending data. But they're not loading. We've got a lot of gremlins out there today. Apologies for that. And of course, technology sometimes gets the better of all of us. Let's have a look at some of the other corporate stories that we are watching. Rio Tinto, BHP we've touched on quite heavily there. Treasury Wine Estates, you know, I don't know about you, but I'm still doing my part, but it does seem that a lot of the brokers are downgrading this company, including Citi, flagging US distribution concerns, the fact that people aren't drinking as much. Aussie Broadband also hitting a 5-month low, with Jarden cutting its rating on a threat from Telstra. All right, let's get to our guest of the day, something quite exciting and different. We're going to discuss gold's strong start to 2026 with Jordan Alicio from ABC Bullion. Great to see you.
Lovely to see you, Juliette.
Now, we spoke last year. You brought in a gold bar. It was very exciting, apart from the fact you didn't let me keep it. Since then, that gold bar, it's even more valuable.
It is, yeah. Gold and silver even more so have continued on the extremely strong, almost record-breaking year that they had last year in the first 2 weeks of 2026. We've seen silver prices in Australian dollars push up towards $135 an ounce roughly, and the gold price in Aussie dollars is at one point gotten up towards $7,000 an ounce. We're having a little bit of a pullback today, but very minor in the context of the gains we've seen. Extremely exciting time in the bullion industry. You can obviously see the gold miners are starting to perform very well as well. And yeah, I think as you look towards the rest of this year, I think there's a lot of reasons to think it'll continue A lot of the banks are sort of upgrading their forecasts, sort of $5,000 US gold, which used to seem like a pipe dream, is almost becoming a bit of a base case forecast for many of the banks now. So yeah, it's a very interesting time in the bullion industry.
It is an absolutely very interesting time. I imagine a lot happening here for you. You touched there on silver. I know that you're looking more at gold, but that momentum, I mean, is that just something that they're going in tandem? What do we take into account of the big moves in silver?
Yeah, I think if you look at how bull markets in precious metals have historically played out, gold tends to be the leader. So it's the first one that moves, and it obviously, for want of a better expression, it has the brand recognition amongst investors. So when people think precious metals, the natural first place is gold. And so it tends to be the first mover. And then what you tend to find is that silver not only plays catch up, but then actually overshoots to the upside. So if you look at the last 50 years combined, all the sort of precious metal bull markets, and there have been about 5 of them in that period, silver has outperformed in every single one of them, and quite substantially. So kind of what we've seen in the last couple of months of 2025 and the first couple of weeks of this year seems to be essentially history repeating. Investors are now sort of moving their capital. They're continuing to go into precious metals, but they're choosing to put a bigger share of their precious metal allocation into silver. It's a much smaller market by size and by liquidity, and so you get outsized gains with a smaller amount of capital. So yeah, that's what we're seeing.
And so how are investors responding, in your view, to the uptick that we've been seeing here?
Look, what we've found, and if I can give you sort of an example, if I was to take say 10 years of data at ABC Bullion and look at kind of a normal week, if we could call it that, we would typically find about 80% of the inflows go into gold and about 20% into silver. Over the last, say, month as a whole, we've actually seen more than half the money go into silver. So gold sales are actually still exceptionally strong, and gold, and that's not surprising given how well gold is performing. But actually, we're seeing much more money flow into silver now. So people are very much, wanting to get exposure. Obviously, part of it just becomes self-reinforcing. The momentum is there. People are buying it because they see the opportunity to make a bit of quick money.
Yeah.
Obviously, that brings a bit of risk with it as well now. But there's 3 or 4 key factors that are underpinning silver. It's got all of those sort of monetary and macro factors that gold tends to benefit from, but it also has this unique factor around industrial demand, which is extremely strong. The AI story, green energy, all of those, those stories can't play out without continued silver demand. It's not getting any easier to get out of the ground. So the supply deficit, or the physical deficit we're seeing in the silver market's probably going to be there for a few more years, and that's helping sort of underpin this bullish outlook.
Now, when we spoke and you brought in that gold bullion, it was like the talk of the town. You walk up Martin Place, you couldn't move with the amount of people lining up outside your office.
Yeah.
I walk past Martin Place every afternoon going home, and it's not the same. And in fact, I saw an interesting post on LinkedIn, probably around early December, that the line for the ice cream queue in Martin Place was now longer. So is there a bubble? Do you see it popping, or what do you think in terms of some of that physical demand waning off?
It's a really interesting one, and you're spot on. By sort of late November, things had quietened down. We're still busy in the physical bullion space, but not quite at that sort of manic level we've seen in October. I can guarantee over most of the last 2 weeks though, the queues are back in both directions, maybe not quite as long as they were in October, but still extremely busy. And of course, the kind of online and the phone trade, which is where larger investors tend to allocate, or how they allocate, those digital queues, for want of a better term, are extremely long as well. Are precious metals in a bubble? No, I don't think so. I think if you look at a handful of other factors or signs, the gold price relative to the S&P 500, even inflows into gold products, but also proxies like gold mining shares, for example, none of those are at levels that suggest a bubble. Now, that's not to say we haven't got a bit of froth in the market now, and maybe a bit of a pullback and consolidation would be healthy, but I don't think we're seeing genuine top of market, end of cycle signs yet. We'll probably get there one day, but I think we're a ways away yet.
What about people sort of, particularly when we talk about cost of living? I was talking about how we're still spending, but if rate hikes are coming and people are going to be struggling with higher electricity bills and the like, are you seeing people just, hocking off to cash converters? Is that still a thing? Getting rid of their physical stuff?
Yeah, look, that's not really the part of the market that we are in, although historically, if you look at the sort of data around the sort of global gold industry, you do find in periods where prices spike
that kind of recycled element of the market does get bigger for very natural reasons. So I'm sure that is going on. I can't really comment on it directly. But I think if you look at the sort of investor and what people will do with their portfolios, you know, a world where inflation remains problematic, or people have to dedicate more of their money to the utility bills and their insurance, like you mentioned at the start of this show, well, you know, that means less money to spend on the fun stuff. That can't help but flow through to, you know, challenges for sales and earnings for other companies that are, you know, listed. And so I think a lot of people now are also buying gold and buying silver because they see more risk of a serious pullback in equities, and they want that portfolio diversification. Again, no one can be 100% sure how this is going to play out, but if you look at the last 50 years worth of data, the periods where markets sell off, where risk assets sell off, the one asset that tends to shine, no pun intended, is gold, and silver to a lesser extent in those periods.
All right, so we're just going to continue to hoard potentially. Jordan, thank you so much. Great to have you with us on the COB, a little bit of something different. Jordan Alessio, ABC Bullion with us. Getting back to stock specifics though, and of course we had on the call today a really interesting discussion, I should say, about US stocks, and Citi was the stock of the day. We had the Marks, Mark Morland from Value 3, Mark Gardner from MPC Markets.
Group, would you be putting fresh money in?
No, I would not. I think there's better options and safer options in the US. And look, I mean, our banks have pulled back quite significantly as well. Like, they're actually back on the radar now. These guys are like, it's a turnaround story, and it's pumped really hard. I have mild concerns around some of the credit quality because they've really pressed things to, you know, to make that turnaround happen.
I think Citi is the weakest of the 6 major banks, so I think it's if you wanted to buy it, it's a bit of a lottery ticket on a successful turnaround, really. So I think they're the highest risk of all. If you look at from the best down, and interestingly, the banks at the moment, and this is the major banks, are at the best relative value they have been to the market for a very, very long time. So they're actually all reasonable in the price category. I think JP Morgan is clearly number one.
All right, let's have a look at our market and the leaders today. It was all about these materials players. BlueScope, of course, yesterday, and focus on that give back, I should say, to investors as well. South 32 on the strong iron ore price, and Nick Scully, interestingly, up there as well, up 3.3%. Downside, still seeing weakness in Zip. We mentioned Treasury Wine Estates being hit with a broker call. Bigger Cheese also not getting a lot of love today, down 4.4%. In the small end of town, European Lithium had a good day. Wow, a very good day, up by some 30% really. And to the downside in the small end of town, Manuka Resources, Amero we touched on as well in the small cap wrap earlier. In fact, a lot of really great small cap chats today. Vitrify, Alcidian, they're all going to be on our website shortly. Tonight, we get UK GDP, US retail sales for December, import and export prices for November, and also the manufacturing indexes for January from the New York and Philadelphia Feds, while, of course, we've been looking very closely at earnings. So TSMC in Taiwan due shortly. Morgan Stanley, BlackRock reporting quarterlies as well. And TSMC, of course, the big one, really driven by that AI boom. And Goldman Sachs and Morgan Stanley, according to Thomas Westwater for Tasty Live, need to impress against the consensus to hold near their key technical levels. Tomorrow, Friday, yay, the Business New Zealand Manufacturing Index. Always very quiet in Australia on a Friday. Don't forget, we're going to have our last call show as well. Let me talk you through some of the guests that are going to be appearing on that. Quite a lot in terms of the advisory. We've got someone from EY on super. We've got the author of ADHD and Finance, Tina Mathams. We've got Kitty Parker, also from the advisory, and Rachel Waterhouse, of course, joining us from the Shareholders Association. And our COB Friday guest, Shane Oliver, will be back as well. Let's recap where the local market is finishing the day's trade. It is firmer by 0.6%, and on the ASX 200, it is up by 0.5%, 41 points, 8,861, a new 20-day high. And really, not that we're that heavily exposed to tech, but if you took out that 2.3% dip in tech stocks, it would be an even better day. But we will take that win and we'll see where it brings us tomorrow. We'll be back from 9:45 a.m. Eastern. See you then.